Joining me now is Halima Adediran, Senior Associate, Financial Derivatives Company. Great to have you on the show, Halima. Good morning.
Good morning, Ladi. Thanks for having me.
Fantastic. Ongoing peace talks between Ukraine and Western leaders. How's that, shaping market sentiment around global oil prices? We're seeing it down this morning.
Okay, so we need to understand that when it comes to oil price, it is affected by geopolitical tension because it tends to threaten the supply side. And starting from this week, we'll see that both WTI and Brent has been trading downwards because of the ongoing talks between Ukraine and Russia. So the market is trying to price in optimism as regards the expectation of the agreement and the discussion, meaning the market is hopeful that it will be a positive one, which will mean that the Russia, which is part of the top producing oil country in the world, will be able to increase its supply, and the sanction is being faced will be removed. Logistic bottleneck will be removed, and also the insurance restrictions too will be taken off for the country, which will mean an increase in the supply of oil in the global markets, meaning it will increase the supply and reduce the price. And so this would cause so many things and implications for various countries, depending on where we are looking at it from, either from the supply side or the demand side. For investors that are into commodity trading, especially the oil market, we'll see that they could reduce their long position in terms of trading for the commodity. But for exporting countries, they could see a kind of currency weakening would happen to export countries, while the import countries would see a kind of ease in terms of their oil price, inflation, and all. So putting all this together, we will see that the talk is helping in terms of driving down the price of oil in expectation of a good and positive result. But we still have to know that the oil price is sensitive to so many things, and which includes diplomatic progress, OPEC plus strategy, and demand trends. So those things will still affect what the price of oil will look like. So when we now come to Nigeria as a consumer and a producer, so this brings us back to reassessing our policy strategy in terms of projection of oil price, revenue as regards oil price, and even our budget implementation. So we need to look into the trend of oil price, the supply, and the demand to really make our budget and the outlook for 2026 a good one for the country.
Right, because it seems most of 2025, oil has been struggling. At this point, we've seen that, range trade, so far. But let's look at, output, definitely impacts prices. To what extent has the, restoration of output at Iraq's West Qurna 2 oil field, how's that, contributed to the current downward pressure, on Brent and WTI?
Oh, okay. So for Brent and WTI, we'll see that Iraq is also a top oil producing country, and I think is one of the top 10 in the world, and second in Middle East. And so the resumption of production in that oil field accounts for, I think, about 9% of Iraq's oil production, which is about 0.5% of the global oil supply. But given that fact, it is still an increase when it comes to supply of oil in the global market. So it's definitely going to help in terms of driving down the price of oil in the global market. But we have to take note of some things, which means what are the things that affected the halt in oil production in that field. And there are various reasons. They have structural issues, they have leakage of pipeline, and also there is change in management. So as the market is optimistic and positive in terms of supply side, there are still some reservation as regards hope the issues will not resurface in terms of that oil field. So generally, it has helped in the supply. And if the production continues in that field, it will still continue to help in driving down the price. Although the percentage of supply in that oil field is minute, but it's still an increase when it comes to looking at the general supply curve.
All right, let's look at global monetary policy at this point. All eyes on the U.S. Fed tomorrow, getting the last decision of 2025. Consensus is, another cut. But, how would this impact, oil prices, in your opinion, if we get that cut, tomorrow, but it's a hawkish cut? What are you seeing?
Okay, so for the Fed, the decision will be made tomorrow, as you rightly said. And I think the market is pricing in like a 25 basis point cut. And what that means, if what that is the decision the Fed eventually go with, that means would have an increase in demand for commodities, which will even extend to oil price, meaning there will be more funds for manufacturing companies. There will be increase in economic activities, which will help the demand for oil price. But let's not forget that as the demand for oil price is increasing, if there is no corresponding supply of oil, it will definitely drive back the oil price in the global market. So it depends on what the demand trend is, what the supply and the output is going to be. So that will determine what the effect will be like. But generally, if the interest rate is cut, definitely is to help in terms of reducing price pressure in the US. And we might see a shift in portfolio investment to emerging markets like Nigeria and other countries that they have high interest rates. So that could help our our stock market. It could help our bond market as well, which will eventually help the appreciation of the naira, maybe in the short term.
All right, we'll definitely be looking out for that decision and forward guidance from the U.S. Fed. But let's bring it down here now. What are you seeing for domestic commodity prices? I did, see, plantain prices, that's dropped, so far. Hope it maintains that, drop for this dirty December. What are you seeing so far, generally with prices?
So for commodities prices, what we observed is that most of them remain flat, while we only see an upsurge in onion and pepper. And the reason for the upsurge is because of the seasonality effect and the dry season effect on supply chain for those commodities. So, but for other commodities, they still remain flat because shopping for Christmas and end of the year festive period is just coming up. So by mid-December or towards the end of December, we might see an increase in some prices of the commodities that are flat currently. So let's wait and see how the trend will look like. But for now, seasonality effect is affecting those two perishable goods, while we could see an upsurge in the prices of the other ones going forward.
Right. So, Halima, I guess you're telling me to go and do my Christmas shopping now for all these food commodities.
Please do. You should do.
Right after this show. Fantastic.
So that you have some surplus, yeah.
Please, yeah. Thank you so much, Halima, for bringing out what's playing out in the domestic market. Thank you.
You're welcome.